Good. So we're now live. Yes. So we are going to what we are going to check today is called multi-time frame analysis. Using different time frames in trading. We are going to check how we are going to use the lower time frame to enter in the direction of higher time frame without making use of any indicator. So that's exactly what we are going to do now. So feel free to ask any question and to comment. And if you like what we are doing, you can subscribe so that whenever we do new content, you will be notified immediately. Okay. So, if you're a beginner, it is advisable that you choose only one currency pair, or at most between 2 to 5 years. And we know that Euro USD currency pair is very popular because of the tight spread, and many people trade it. Yes, so it is beginners friendly, as it is not all that volatile. Okay, let's start. As you can see now, what I have here is just my candlestick. The next one I have here is my volume. But that of volume will be the topic of another day. Let me delete it. So what I'm having here now is only candlestick. So nothing like all these indicators, multiple indicators. You know, there are some people when you check their chart, you see a lot of indicators looking like cobwebs and so on and so forth. By so doing, the person may not understand exactly. You know, it may be too confusing. Yes, but when you keep it simple, whenever you keep it simple, you find out that you'll be able to follow what is happening and know when the big boys are entering their trade. Okay, now multiple time frame analysis. I will go to my daily chart. Okay, let's start from the weekly chart. We can see the swings very well. Last time I talked about market structure. As you can see the movement of this market now. Look at when this market was trending down, when it was coming down. Until it broke this area, it's continuing moving up. This is the swing down, moved up, swing down again, moved up again. Then it tried to, it took out this, but it didn't take out this one. Yes, it moved up here. We didn't take out this one, but it has not taken out this one too. But here now, this is the highest previous swing. Then it came down, it has taken it out. So as long as it has taken it out, here, we say that weekly time frame is bullish. We go to dailies. This is our daily time frame. So we start from the left hand side to know what is happening. Look at here. So the highest swing was here. It has also taken it out. But there's a kind of retracement now. Yes. So as long as it has taken this recent swing, it has taken it out, we now look for only opportunity to buy based on our daily chart. Yes. But if you go to 4 hours, we will now see more of it. Okay, if you check here, it has been moving up. This was the last week high. Then we have a kind of swing low here. Good. So before we can start looking for opportunity to sell this Euro USD, we must wait for the market to take out this swing low. Yes. This is our lower high. Exactly. Then based on the market reaction, we will now be watching what will be happening here. Look at. Let me. Okay. Okay. Come in. I want to remove some of those properties here, so that I can see my chart shift. Okay, let me remove this. Once again, okay. Let me remove this. This is something 5 minutes. Yes. Good. Okay, now. So here we have, look at these areas from here. They're going to be our area of interest. Those areas now, they're going to be our area of interest now. So we'll be watching this market now. This is on 4 hours. Here is this is a support or demand zone. That is why I have it from here. So from here now, so let me do it here. Okay, from here now to this, we will be watching for any rejection, just like bullish engulfing candle or pin bar. So we can go down to 1 hour. Having marked the area very well, we can now go down to 1 hour. Okay, 30 minutes. Okay, here now we are watching what is happening here. Exactly. So from our daily now, we found out that the market is moving on. Though we are having this candle is huge. If you go to 8 hours, look at this candle that is forming. Under 12 hours, look at a huge bearish candle that formed. It may be the beginning of the reversal, it might not. So until it takes out this area, that's when we might be looking for an opportunity to sell. Because we check our weekly time frame, it is bullish. Daily bullish. We check our 4 hours, also bullish. So in this situation now, we can monitor, we can now check what is happening here based on 1 hour. Or we can go to 30 minutes. At once we pick our 15 minutes and check exactly if you can have any reaction here. And there is a kind of reaction here. I'm seeing this reaction of 15 minutes. So this will now call for volume spread analysis indicator. So you go to your indicator, you pick under volume, you pick volumes. Yes, on that tick. So let's check what's happening here. So as for me, I'm going to buy here. This is where I want to buy this thing instead of selling. This is aggressive entry. Then another entry should be if you go to 5 minutes, you check what is happening. You draw. Since we have agreed now that the market is bullish, 4 hours is bullish, daily bullish, weekly bullish, so we want to trade in the direction of long-term trade. Okay. Look at this. So here now, it has broken, but the recent high here is still intact. Either we wait for here to be taken out before we enter. Yes. For here to be taken out. Then we cannot enter. Or we can enter aggressively. With our 5 minutes, we enter our trade. This is I enter with one standard lot. Okay. I'm buying now. Okay. Good. One standard lot means that each movement is equal to $10. Yes, that's what it means here. Each movement here. So my stop loss now will be here. I will check. Aggressive stop loss should be here, but we will not go for aggressive one. So to give room for the market, we can choose our stop loss below this area here, which will be giving us about 8 pips. Yes. here now we have what we have now. Our take profit now should be, if we are risking 38, at least we should have about 3 times. Okay. And we are risking 38 pips. So I'm going for 3 times. 38 times 3 is what? Next 2 is 76. Okay. Which is around 100. I'll go for like about 100 pips or more. Good. Okay, this is no, still that we want. Okay. Okay, I can go here. Okay. Here now. I'm targeting 107. I'm targeting $1,076. Whereas my risk is $386. So that's all. As the market, if it goes to my favor and moves considerably to my favor, I will now lock it to break even. And I will now shift that my stop loss to break even. So that's how we've been able to. Okay. Then if you want to enter aggressively, it can be below here. If you want to enter aggressively, it can be below here, which is very, very risky. I will enter another trade. Let me pick GBP USD to check if it is giving me something here. Okay, now I'm not having any entry here. Let me check what's happening here. Okay, let me still use the same Euro USD. So since this is where I entered before, maybe if I'm entering now, I will buy again. This is demo, so that is why I'm just using it for educational purposes. So my stop loss now will be here. Tight. This is a very tight one. Tight stop loss. The low of this was low was 1.1122. 1.1122. Okay, so my stop loss very tight. Maybe I can 3 pips. Okay, 2 pips below the low of the lowest point. So let us see the one that will play out. Maybe it may not be. Next time you can check it. You can just go to your Euro USD. You have seen our entry. You can check it out and see the one that plays out. So that is how to do multi-timeframe analysis. Yes. I can even, let me pick my 1 minute. I can even enter with 1 minute. Oh, this is 1 hour. Why did I move 1 hour? 1 hour should be here. We want to include now 1 minute. What is it now? So I can still, if I want to enter with 1 minute, look at our recent swing high is here. It has not taken it out. So we are hoping for price to take out this high here. That is the high is 1130, let's say 1131. So if it takes it out considerably, yes, that's another way. If you don't want to enter based on, maybe you don't want to enter blindly on the zones, those value areas. So, and that we're supposed to wait for the price to take out this recent high. Then now wait for a pullback. Okay, let me still wait and see if it will work. Meanwhile, if you have any question, you can ask. We are waiting. So, Justin Badwin, do you have any questions so far? Because I'm just trying to wait for the reaction based on price action. Okay, so as you can see now, one of the reasons why we are supposed to wait for a change of character. What we call change of character, based on this 1 minute chart now, this is the highest one. That's as the market gets there, instead of taking it out, it started coming down. So this is one of the reasons we are supposed to wait for a change of character. So the change of character, what we mean now, if this trade now is moving up, this price is moving up, and it goes convincingly above this area. Let me mark it. This 1.1130. If it takes it out, we can now wait for an entry. If you want to play based on this 1 minute, okay. But let's still wait for a little time to check to see what will happen. Forex is a waiting game. Okay, we are still waiting. While waiting for the price reaction here, let's pick another currency pair. Let's pick another currency pair. Okay, let's pick Euro USD. So, like what we want to do, the first thing we need to do is to check our higher time frame. Let's see what weekly is doing. If you check weekly chart, you see this one has printed a higher high, because it is higher than this high. Look at it here. Look at the highest point here before. Based on weekly chart. Okay. This pierced it and went down. So our weekly time frame is bullish for now until it takes out this area. Until it takes out this area. Based on our weekly time frame. Let's go to our daily time frame. If you check our daily time frame, this was the most recent. Look at on daily time frame. This was the most recent swing high. Yeah, man. So this market took it out. It was coming up. It took it out. So at this point now, and the market has not taken out this one, it has not taken out this area. As you can see, we are having a reaction here. So let's go to 4 hours. We took it out here, but after that the market is trying to move up. So 4 hours candle is not yet closed. So let's go to 1 hour. Oh my count. There is what we are having. We are having a giant candle here. Let's wait and see. In the next 8 minutes, 1 hour time frame will close. Now let's check 30 minutes. Let's check 15 minutes. Okay. Look at what is happening. If you pick our 5 minutes here, you can bear me witness that we have a low. We have recent high on 5 minutes, which has been taken out. So there is an opportunity now to enter a buy trade. Yes. If you want to be conservative, you can wait for it to come back. You can wait for it to come back to test this area. If you want to be aggressive, you can wait for 1 hour. When 1 hour candle closes, you cannot enter. Okay, let's go back to our. Okay, look at here. The thing has refused. It has refused. It tried to. It has not been able to break this area, which means it may be the best thing to do may not be to buy, because what doesn't go up will definitely go down. That's what is happening. This is just getting? Let's go back to this one to find out what's happening here. Okay, next 6 minutes, 1 hour candle will close. Wait. Is it waiting game? Okay, meanwhile, we can use the opportunity and mark out our areas. These are timeline. The market will decide not to honor or acknowledge any timeline at all. So the best thing to do is just to move, read what you see, not what you think. Yes. We must read what we see. Not what we think that will happen. Okay? We're waiting for next 4 minutes. Okay, a question, can we enter a cell there? I will now ask the question. Okay. So, which currency? Is it on Euro, USD, or Euro AUD? Now, as you can see, that tight stop loss has been hit, so we are stopped out on that one. So we are stopped out there now. Yes, we are now stopped out. We lost about how many pips? Okay, about 10 pips. That's what we lost. Yes. So let's go to our Euro USD. That is why I told you that we were supposed to wait for here to be taken out. But this one now we now put at least a very wide stop loss. Whatever that may happen, the market it will now afford the market opportunity, at least to do whatever it wants to do. If it will hold, then we move on, because this game is a game of winning and losing. And if you lose $10, make sure that you gain $20 to $30. Yes, we've lost about $100 now. Okay, so this thing has come to this area. Maybe it wanted to test out, it wanted to feel this front. Yes, it wanted to test it. Okay. So let me draw something in between our zone. Okay. We normally draw it between the last bearish candle before the bullish movement up, and vice versa. So before we now take a trade, we are supposed to, we must wait for here to take note before we take a view. So let's mark it. Okay, yeah, so let's see what happens here. Euro USD. Okay, look at that's our Euro USD. I think we have a good opportunity to enter the trade. I will enter this trade here. I'm entering here. What is my USD? My reason here is a very important demand zone. Very important demand zone. So I will enter based on 1 hour. This is what we have here. We have wasted a little time. So I will enter. So I will enter here. Okay. Now, my entry. So immediately I enter, look at the charges already. These charges are known as the different. This is spread. Yes. Okay, the question. I can't sell on Euro USD. Okay, Euro AUD on that area, on that point. If I must sell, I must wait for a kind of pullback. So I must wait for a pullback. What do you mean by pullback? As you can see, yes, we know that it is down, but you don't need to sell here because this area now, look at it here. Here is a demand zone, so we can wait for the price to come back to somewhere here. Yes, for the price to come up to this area, come up to this area. Then if it comes up to this area, we can now watch the reaction. If we now get a signal, we can now enter. That is it. So for now, we cannot sell. Because not. Before we sell, we wait for market to come. So that is why I'm buying. So before it could come here, I've been making some profits. But it may also decide to. Then if it decides to not to do a kind of pullback or retracement or reversal, then we allow it to break down. If it breaks down maybe to this area, then we now wait for a pullback to this zone before we sell. That is it. Let me check if I can have something I can use to explain. So from here now, we must allow the market to come. Maybe it will come up. Okay. When it gets here, it may decide then if it comes back again to this area, we cannot sell. But at this point in time, it is not advisable to sell because it may turn against us and started moving back. Because here is a very important area. Because if you check very, very well, before the market, it broke down here. The market wanted to move up. It couldn't. It came down. Then, before it was able to break up. So if it comes back to this area, it must retest it. It must test it again. Yes, it will at least. But it will not be easily. Even if maybe the market wants to continue moving, there must be a little fight. That is why. So we enter this trade now. So we now put our stop loss here. Let's check our stop loss because I know that I'm trading here. I want to. Okay, this is when I enter here. No, I will allow some room. So I will now look at. Here is the last candle. The last candlestick. Okay, here is the last candlestick. Here before it moves up. So below it. Below is I want to get below. Okay, hold on. I want to get below this candle. Because below it should be 63.83. 63.83. So my stop loss should be 63, around 63.8. Let me check the spread again. Okay, so wow, the spread is about 4 pips. So I will add another 4 pips instead of here. Yeah, so we are. Our risk here now is 78, about $78. That's our risk now. So let's pick our. That is our reward should be minimum of 2 times, but I like 3 times. If I come here, 398. Okay, 398. Then let me check. Yes, give me 398. Let me check my stop loss. My stop loss is okay, 500. Oh, sorry, 531. Okay, 531, which is too much. That's because of because of the volume I'm using. I'm using a high volume. Okay. Good. So okay, our stop loss like $285. So times two of that will be around. So we go for it should not be less than 600. Okay. Here is giving us 1,000 something. Giving us 1,032 dollars profit. Yes. So that's all for now. It's fair. Yes. So we don't need to be because I'm trading now with higher time frame. So I have just entered the market. As I've entered the market, I don't need to be watching it. I don't need to be observing a video. Just for maybe the next 1 hour, 2 hours, 3 hours, 4 hours, I can now go back and see how to manage it. If it goes to my favor, I can now adjust my stop loss and so on and so forth. It's not a must that we must allow our stop loss to hit. If we now check that the market has gone maybe based on our analysis, there is nothing, the market has turned against us. So instead of waiting for the stop loss to hit, you can close it manually and save some dollars. Thank you. So ask your questions, suggestions, share to your friends so as to encourage us for doing more free content on Naked Chat. Thank you.